Now we try to look at pockets which are trying to come out of a period of hibernation. Indian roads have fewer new vehicles than what automakers are hoping to put on the street, and falling sales meant fewer loan disbursements. That's where Muthoot Capital comes in. The non-bank lender is one of the country's largest two-wheeler financiers. So the recent uptick in retail registrations should ideally make them happy. But is it too early to celebrate, or are these lead indicators for a good period ahead? Let's ask Madhu Alexiouse, who's here in our studios to talk about that and more. Madhu, so good having you. Thanks much for taking the time out and speaking to us.
Yeah, thank you so much.
So we analyzed the Vahan data portal, Madhu, and that seemed to suggest that for the month of November, there was a bit of an uptick, or quite a bit of an uptick in registrations compared to the recent months. What is your analysis? Have you indeed financed more vehicles in this festive season, and is it too soon to kind of call it a turnaround?
Two-wheeler industry, you saw last, let's say 3 or 4 quarters, it had been on a degrowth. Q1, Q2 is the time where we felt it had actually bottomed out. And festive season, of course, as the data suggests, and what we have experienced, there had been uptick, and in a big way. Compared to last year, definitely it was not that big, but given our expectation that how the trajectory goes from Q1, Q2 and Q3, a good jump of about 20-25% is that we are seeing. Like you said, whether it is too early, we'll have to wait. Of course, October number was too good. December, every year, the sale is actually slow because the model changes, and so customer would like to wait for the new models to come in, and they'll go for that. So let's look at Q4. Q4 also we are expecting the numbers to be on high. One of the reasons being the BS4 inventory would get cleared off. Yeah. That would be available for customers. And then BS6, already a few of the OEMs, they have launched. And from 1st of April, BS6 vehicles would get financed or sold. So Q4 we'll see a lot of BS6 products coming in, and the initial feedback from the ground, from the customers, is that BS6 vehicle models are good. OEMs have come with a lot of new features. People are ready to pay a bit of premium for that. So the fact that price would go up and it may impact sales is something which may even out once the features are out for these new vehicles. So
actually, that was my question to you, that you'll start to see pricing pick up, and you've already started to see some of the four-wheeler companies increasing prices like Maruti. So that is not a concern or a worry?
Yeah, definitely it's a concern, but if you look at the two-wheeler sales in India, close to 2 crore two-wheelers are sold every year, of which not more than 37% of two-wheelers are financed. And balance volumes are actually bought cash down. So while the price increases, a lot of cash customers would move into financing their vehicles because they may not be able to.
That's an opportunity for you.
There's a huge opportunity as far as two-wheeler sales is concerned, two-wheeler financing is concerned. And it would also help a good set of customer coming into the financing piece, because earlier they were buying cash, and now they need a slight additional margin money to bridge that gap. So as far as two-wheelers is concerned, I think we should not compare it with the auto industry or car industry. I mean, that's a basic commuting requirement in this country, given the India's population. I think this is a basic economical commuting available for a customer, and given the congestion and other factors that is playing in the last mile connectivity, I think two-wheeler sales would continue 2 crore plus minus as we go ahead. I see nothing much to worry. Compared to last 2 years, there would be plus minus, but there's a stable base number which would definitely happen as far as two-wheelers are concerned.
Can you quantify that too good that you mentioned? That you mentioned that October and November were too good. Can you quantify that and give a comparative analysis of what the previous 9 months numbers might have been? And therefore, why do you say that October and November are too good?
October number, I'm comparing it with Q1 and Q2 of this year.
Right.
Because I said that Q1, Q2 bottomed out. Okay, so compared to last year, definitely there's a degrowth of around 15%.
Yeah, sure.
But the uptick from Q1, Q2, which was the lowest, we are seeing that Q3 is slightly better. And as we go into Q4, there are various factors which would actually push the sales up. Customers would have very good deals in the market to buy BS4 vehicles, and definitely price advantages there compared to BS6. So we expect the numbers to be on a higher side as far as Q4 is concerned.
What is your, analysis of what growth the industry could do? And then obviously map your own growth to the growth of the industry.
I said that industry, the average sales last couple of years had been 2 crore units of two-wheelers that gets sold in the Indian market. This year it would be around 1.8, 1.85 crore. There would be a minus 15 lakh around that, because there's a correction of inventory that would happen as far as BS4 vehicles are concerned. Muthoot Capital, we generally do not try to link our growth with the market, because Muthoot Capital has a lot of upside available as far as two-wheeler business is concerned. We were predominantly South company. Even now my portfolio is around 70% from South.
Yeah.
We have expanded into other parts of the country. We are there in the 22 states, almost 540 plus districts in the country. Our expansion is recent. So for us, the upside is how we grow the market share in the newer markets where we have entered, how we can increase the counter shares there. We have close to 8,000 touch points, including our flagship company branches, which is about 3,500. Our own branches, that is there, 8,000 touch points. Predominantly, these are in tier 3 and tier 4 centers. So we are actually there across the country. Only thing is how we increase our counter share. The shift of customers from cash to financing, that would help. So there's a huge upside for us as far as our current product line is concerned. And of course, we have other products lined up that would again enhance our top line and bottom line.
So you're not putting all your all your eggs in one basket of...
Definitely, our long-term strategy is to be a multi-product organization. We have launched our second-hand car product. We have piloted now. We are almost in 17 centers. By the end of this financial year, we'll be around 20 centers. So that is one big product that we'll go very aggressive as we go forward. As a vision, we say that we want to be at the doorstep of common man with simple and easy products. So whatever they need in terms of what is the next aspirational need, and that is where the products that we develop and offer to them. So from two-wheelers, we have many other products where we can graduate, including consumer durables, as we go forward.
Wow. Okay. Well, everybody seems to be wanting to do that. Madhu, just one question. So would you say that your growth will not necessarily be a factor of how much the industry grows, but how much you grow within that and increase your market share? And is there a ballpark growth estimate that you have? CAGR for the next 5 years, not necessarily what will happen in the next 2 months.
See, our CAGR, despite the industry slowdown from book perspective, had been close to 25%. We have always benchmarked that we'll grow double the industry growth. So average 20 to 20% is something which we expect next 5 years.
Average 20 to 22%.
22%.
Book growth.
Yeah, book growth is what we are expecting, and then the related parameters also we expect to be like that.
But this 20 to 22% is keeping in mind the underfinanced two-wheeler segment and the other segments all put together.
Yeah.
The console book will move up 22%.
Yeah.
The entire business.
Okay.
The other thing...
Sorry, just a follow-up. Would that be profitable growth? Because if you're trying to expand into areas which you are not present in, or even in two-wheelers, other centers, you might have to incur fair degree of cost in order to do that. Yeah,
so, last 2 or 3 quarters, people came and asked me why you are not kind of increasing your market share, or why you are not aggressively growing. A lot of players vacated the market, and we were very conscious about it. We wanted to go very conservative. We never wanted to take a market share of a player who has vacated where it doesn't match the customer profile that we are looking at. So we went conservative. We didn't go for increasing our growth there. But we have our own internal way of looking at the risk related areas. And wherever we felt that there are markets which is good, which is green for us, we grew aggressively there. So while the markets would have grown by 15%, there are markets where we have grown by almost 20%. And within that, wherever the market was underperforming, we would have restricted our funding there, and maybe we would have reduced our portfolio there. So internally, we look at which are the positive markets where we'll grow and where we'll degrow. And it is a very dynamic decision that we work on, because ultimately we need to deliver the profit. So definitely shareholders' objective is kept in mind while we do our business.
Right. You know, we've seen the RBI cut rates also by 135 basis points so far this year. Your cost of borrowing has gone up in Q2 to 10.3% from 9.4%. How are you passing on this additional cost?
We would have passed on partially to the customer, partially we would have absorbed. The key thing is whether the cost is going to get reduced in next couple of quarters, not more than 10 bips that we are expecting. That's a big cost that if it comes down as we go ahead, I think it would help us in our ROE, in our PAT. But nevertheless, today the liquidity is not an issue for us. Even during last year, Q3, when a lot of NBFCs got impacted, we had flush of funds, but we went conservative. We said we are not going to go very aggressive as far as growth is concerned. So in terms of cost, yes, there's a concern. Cost of funds, there's a concern. But liquidity, absolutely perfectly fine as of now.
It's heartening to hear. We wish you all the best. We would love to talk more about the paucity of time, but all the best for the quarters ahead. And
thank you, Neeraj.
Thanks so much for joining in our studios today.
Thanks.